and that there's essentially has been dysfunction within a lot of markets. Now, obviously, the Fed's trying to address the Treasury market, but this is sort of like the legacy of the Volcker rule, where dealer inventories are just not there. The market makers that we used to see are just not there. So you're seeing these liquidity gaps that everything is falling through, and the Fed is trying to fit that in.
Vehemently shaking his head in agreement there. So you're saying this is a problem that effectively goes back a decade but became acute this week. You know, ironically, yields are declining, right? So in a way, you would expect a lot of times when there's no liquidity and yields are shooting up. That's not exactly what's happening here. So why the panic about what's going on in the Treasury market, and how is that connected, Peter, to the rest of the financial markets?
Well, you really can't get more liquid than a Treasury market. And when you start to see bid and offers start to separate, it tells you that there's real fear that no one is willing to step up to be that buyer to the seller, or the seller to that buyer.
Of even
and that tells you there's
stuff in the market.
Exactly. Right? So that tells you there is dysfunction, there's panic, there's not enough capital to back these bids and offers. And again, it's legacy Volcker rule.
You know, I don't want to be too picky on these minute-to-minute moves, but one more thing before I move on, Peter, is we're now down 1,300 points still. So there was definitely some initial relief here, but is this enough relief?
This is just treating a symptom. The relief is when we get millions of tests over the next couple of weeks. We separate the healthy from the sick, and we continue this shutdown. While it's damaging to the economy, it at least gets us to a safer place. A lot of people that then won't get infected.
Okay, Darrell, let me bring you in on that. And, you know, as these markets continue to gyrate here, will this big move by the Fed, you think, ultimately help to calm things down, especially as we head into the weekend, or not? Is it all going to come back to coronavirus and the public wanting more assurances there?
Well, I think you're right, Kelly. You just hit on this. So this is infusing liquidity into the market, and a huge amount. But it's not necessarily targeted stimulus that the markets have wanted, which is why I think you're seeing a little backup. Peter's points are spot on. Yesterday, we saw a very unusual move in rates going higher, credit spreads widening, the U.S. dollar strengthening, and equity selling off. I've only ever seen that happen 2 times, and it tells you there was liquidity issues with the U.S. Treasury market, and therefore the Fed comes to the rescue. The only other point I'd make, too, here is, remember, the issuance market is relatively closed, if not outright closed at this point. So companies started to draw down those big lines of credits out of an abundance of caution because they're not able to access the bond market right now. They're not able to sell bonds in this type of environment or refinance bonds. And so they needed to capture that liquidity while it was available.
You know, Barry, let me bring you in here because, you know, you take a much longer term view of these things. I sort of think of you as Buffett-esque in that regard. Would you expect this to be the kind of market that Warren Buffett, you know, if we're looking for votes of confidence, we've just got a liquidity vote of confidence from the Fed. We, frankly, kind of can't order up a vote of confidence in terms of treating coronavirus. What do you think that, if anything, if you were, you know, Berkshire, if you're Buffett, are you looking here? Are you, like I said, Caterpillar's market cap is $50 billion. I think Boeing's down to $90 billion. There's been massive dislocations here.
Yeah, I see a big donut, and it makes me hungry right now. On one side of the donut, things were going along great. Now we're in this hole. We don't know how big this hole is going to be, but things are going to be great on the other side because the economy is going to pick right up in the sense that there's going to be pent-up demand. So what we have right now is something we don't know, how much earnings will fall, how much, you know, the economy will slow down. But I see a big banquet table, and they're starting to put these things I love to eat on the banquet table, and I would be starting to look at what I wanted to buy more than what I wanted to sell. Yes, there are some things to sell right now, but I'd be looking at that second move, which is what would I want to buy, what will do well after this passes, as the other guest mentioned.
And